Whoa! Mortgage your house and buy Bitcoin with breathe air. There's no second best, okay?
Jim. Wednesday. Trade of the day. Right, so today is CPI day, which is inflation. So today we see the US inflation data, the consumer price index. So there's a bunch of different measures of inflation. This is the one that gets focused on the most by the market, CPI. Not the one that the Fed pays most attention to, that's actually core PCE, but this is the one that the market really cares about generally. So this would be the number you'd expect to see moving the market if traders are to react after it drops. So expectations year over year, 2.9%. So in a very simple sense, the market is a little bit worried about inflation, or has been, because Powell himself has said it with the Feds after they didn't cut rates, and they were asked why. He said basically inflation. You can boil it down to, we're not certain that we've beaten inflation. We are not fully confident that inflation is behind us. Therefore, we're not going to cut rates so aggressively. And then something was said yesterday that I think is very, I don't know, it was yesterday, the day before, whatever, but it was yesterday. Powell spoke. Powell testified yesterday, and he said, we are not doing QE, money printing. We are not printing money until there is, we're not doing QE until there is zero rates, until rates are at zero. So he says basically the QE, the money printing, is a zero interest rate phenomenon. And we don't have 0% interest rates, and we're not going to, because they're not even cutting from wherever it is at the moment, which is 4.25. And that's really bad for things like anyone trying to repeat or expecting 2021 to repeat, to bail out all their bags. That's not going to happen. As Powell's saying himself, we're not going to be printing any money. They're going to slow the pace and eventually stop the QT. So they're going to stop reducing the size of their balance sheet, but they're not actually going to start printing money unless there is some major economic crisis. So you have to get the idea out of your head. I think most people are aware of this now, but there still is this section or subsection of the market that thinks that there's just, massive money printing is just around the corner and that's going to bail everything out, and then just hold on to all your bags and they're all going to pump. It's like, it's silly. And the reason why it's silly is because, number one, Powell's literally saying we're not going to print money. And then number two, so that's the monetary policy, that's the Fed side. But then two, if you've got the government side, they're literally doing the opposite, right? The whole Doge thing is they're uncovering all this wasteful spending and they're reducing it. They're literally doing responsible things, which is really good, but not good from a perspective purely of just, is there going to be more money printed? In fact, if anything, they're going to spend a little bit less recklessly. They'll still spend, they'll still print, but I'm sure that Trump wants to start his term by saying, look, we reduced the deficit. So, the US is in this massive amount of debt, 36 trillion, whatever. But I think if Trump can say, look, we are reducing it, and then just go back to all the printing and everything else, and not be quite as bad as Biden was, but still just print, still not actually reduce it materially, I think that's how it will go. So does this CPI really matter then? In that context, does it matter? I don't know. It's hard to actually see what would be a positive or negative catalyst coming out of this. So it's 1:30 is the time. Obviously, main thing, markets will get, the volatility will really dry up leading into it, right? So the closer you get to it, the less the market will move. It's going to squeeze into this tiny little area of nothingness, and then you'll have a spike, probably of volatility in one direction or the other, clearing out any stops of anyone who's shorting or anyone who's long. It could be all the way up, all the way down. It could be, depends, right? Depends how volatile that move is. Depends what number comes out, how the market reacts to it. But typically, you see this squeeze of positioning beforehand, then the news comes out, then the number drops, and then after that, you see which way the market's going to actually trend. Is it going to be upwards or down? It may, of course, just stay in a shitty range, but I think we're ready to move after having compressed for so long. Mentioned that build-up of shorts. There's clearly people betting on this being, I don't know if their bets are directly on CPI, but there's definitely a build-up of shorts that would indicate that people are betting for it to go lower. So what would trigger a lower reaction? Well, rising inflation. Very simple. Rising inflation will be seen as bad for risk assets, even though it's not really. It's certainly not bad for Bitcoin. But in the short term, all that matters is positioning and the triggers, of headlines. If inflation goes lower, the markets will react favorably because it adds fuel to it adds to the narrative that they're beating inflation, right? They're actually getting this soft landing, and you have this kind of Goldilocks scenario where the economy's not getting crushed, but inflation's coming down and everything looks good. But even that will make it more likely that the Fed will cut rates, which is really all that's being priced in here, is like, when are the Fed going to cut? When are they going to cut next? And what does it mean? So if you look at the interest rate projections, the next meeting is in March? 19th of March is the next meeting. The expectation is that basically 95% odds that we stay at the current, so no cut. Then at the May meeting, 78% expectation that it stays, right? So pricing in about 20, 21, 22% that there will be a cut, at least one cut in the May meeting. And by June, it's about 50-50. 50% chance of no cut, 50% chance of some number of cuts or a single cut. So what you'll see today, based on the inflation number, is these odds will change, and it's that change that gets priced into the market to be reflected. So if inflation comes in as expected or lower, so if inflation drops, the inflation rate drops, obviously there's still inflation, market probably reacts favorably and prices in cuts a bit sooner, and you'll see a rally, bit of a risk on move. And if inflation rises, you'll see probably reflexively a risk off move, because it will push the Fed further back. It will create negative sentiment and negative headlines and fears about, especially with Trump and tariffs, right? If inflation starts to look like it's rising a bit and Trump's doing all the tariff stuff, people are going to get even more worried about what's coming next, and that'll probably cause some kind of downwards movement. I actually don't think, outside of this build-up, so this build-up of open interest gives us fuel, regardless of what the inflation number does. That definitely gives us fuel to have some kind of significant move from here. By significant, I mean actually getting above 99 or below 94. So breaking clearly either side of this sort of, this chop that we've been in. Something to take us clearly below it or clearly above it. I think we have that building up here. My guess would be that it's going to go lower, because that's obviously how the market's moving currently and seems to be each bounce getting sold into, but you never know. Bitcoin is a bit like a beach ball being held underwater. Right, the the old analogy. Because of course, at any point, Bitcoin is ready to just spring higher and go to fucking $1 million. We know that's the eventual path. It's just a question of when. It's obviously not going to happen this week. So that's why in the short term you can see this bad price action, bearish price action, whatever. But obviously when you zoom out longer term, it doesn't pay to be a Bitcoin bear. And that's what's being priced in right now. All coins have been bearish. And so it's like everybody's accepted now that alts are bearish. And now they're trying to... It's kind of like the market's now starting to try and get bearish on Bitcoin. It's like, well, We'll have to get bearish on something else. And so we'll see how that inflation number affects things today. But that's the only thing I can see really that will move the market. Unless Powell says something more on his, I think it's second day of his testimony. So I don't know how much more is going to be new today that he's not going to have already spoken about yesterday, but we'll see. And that is that. That's that for today. So CPI and Powell testifying. GM.